Well, now we quickly move on to fireside chat, and it's on C2 IPO. Well, let's quickly welcome our speaker for this session, Mr. Avinash Godkhindi, MD and CEO, Zaggle, and our moderator for this session, Hamsini Karthik, Deputy Editor, Hindu Business Line. Let's welcome them on stage.
Perfect. Thank you all so much. And like I mentioned on my LinkedIn profile, being called for this fireside chat felt like a very surreal moment because as much as I'm a journalist, I also analyze companies. I give recommendations on whether you need to buy an IPO, keep your money to yourself, buy a stock, everything. And when I met him around IPO, I was confused. And to be doing this fireside again with him, it's really going through a circle. Thank you. We get started. One of the things that I didn't quite understand when you came out for your IPO was how should you classify yourself? You were a SaaS company. You were also layering yourself as a financial services specializing SaaS company. How did you prep up yourself for the IPO? What was the thought process then?
So our thought process was very simple, Hamsini. We said, we have a business model which works. We were, by the time we were going into IPO, about 3 years plus PAT positive. So we knew we had a business model that works. We were growing at a very rapid pace. And we were who we were, right? We were a SaaS fintech. It may be a relatively new space in India. Spend management as a space is relatively new. And that was our challenge to go around the space, being a very unglamorous company,
Sure.
to explain what we do and why people should, invest their money. But we took a call saying, rather than trying to position ourselves in a particular way, let us position ourselves as who we are. And let's explain that with global parallels, because there are multi-billion-dollar companies globally
Sure.
like Brex, Ramp, Leo, Spenmo, FleetCor, Vex. Some of them are listed in the NASDAQ. And hopefully Indian investors and the Indian market would understand and respond to that. It's a faith in Bharat or India that we are smart enough, we are wise enough to recognize the opportunity as a.
Let's come a little to what all you prepped yourself with a little later. But when did you really realize that you're IPO ready? You want to hit the market. What was your motivation for listing?
To be honest, Hamsini, you're never fully IPO ready. It's like a marriage. I call IPO as a
Right.
marriage, and it's a once in a lifetime event.
Right.
And anybody who is married here would possibly relate to this. You're never fully ready. You never are fully sure that what I'm doing is bang on, right?
But 1-2 years before you went
Yes,
public,
yes.
when exactly? If you
So a
could
couple
give
of
some
years
time.
before we actually got listed. We got listed last September, on 22nd September 2023. So it's about 5 months, give or take. And we knew a couple of years before that IPO was a serious option for us, because by then we were seeing a business model that was working, profitability kick in, increase in customers. And that was when we really thought that, IPO is something that we should seriously consider.
And since then, as a company, as an entity, what are the few things that you started prepping yourself with, making yourself IPO ready? Did you have to go through some changes? Did you want to realign your business a little bit so that you'd be understood more by not just a particular set of investors, but by a larger population as well?
See, I think in this regard, your bankers are your best friend, your investment bankers. You may not be their best friend, but they are your best friends.
Right.
Their best friends are always the investors.
Investors.
Right? The MFs and the FIIs. But for you, they can give you a lot of insight as to how to position your company, how to craft your story. It's not necessarily that you should change your business or your business model, but you need to be able to understand how to tell your story. Because an IPO investor, if a VC has maybe an hour's attention span, an IPO investor has 5 minutes. In the first 5 minutes, if you're not able to grab MF or an FII's interest, they're going to just close the conversation in 30 minutes.
Absolutely.
Right? So that's very important, that how do you position yourself? And a compliance is extraordinarily important. So making sure all your compliances are in place. End of the day, an IPO is a permit that the government is giving to you, or SEBI is giving to you, to be able to raise money from the public. It's a huge responsibility, right? So the government, just like a permit that you may ask for anything or a license, this has its own process. I'm surprised when people think, oh, we would be able to fast track our IPO. No, there's a process. You'll be able to fast track it to a certain extent, but not beyond a point.
Absolutely true. Absolutely true. What were the few things that you started focusing more on in the journey towards IPO?
See, first of all, there's the external facing and there's the internal facing,
Yes.
right? So the external facing is how do you craft your story? How do you, beef up your bank partnerships, for example? How do you make sure that your corporate relationships are stronger, deeper? Because ultimately you need all those, especially for a company like Zaggle, which was, frugal, nimble, humble. We are very below the radar. So for us, the DRHP, which is the IPO document that you file, we were keen to have some big logos. So we had partner logos like DBS Bank, we had Visa, we had IndusInd Bank, we had ICICI Bank, and a whole host of corporate customers, Tata Steel, Persistent Systems. And that's when people started to say, hey, if these are their customers and these are their partners and these are the kind of networks that they work with, there must be something good about it. So that's the internal part. That's the external part. The internal part, as I said, making sure your compliances are in place, making sure your simple things like, how is your GST payment record, right? How are you making sure that your GST, your TDS, your ESIC, etc. is getting paid? Are there any other, matters that you need to put in place? Those are all things which, until you're working on an IPO, you sort of think chalta hai, in IPO, one thing I can tell you, if you're looking to get listed, kuch nahi chalta hai. You have to get it right, and you got to follow the process. And if you do that, you'll be able to, hopefully do a good job. IPO windows are also short, so you can't just do an IPO anytime. Right now, the window is open, and whenever the window opens, everybody thinks this window is going to stay open in this market forever.
Yes.
But, it's never the case. There are cycles for IPO windows, and every year you see the window open maybe once or twice.
Let's come to the more interesting part, roadshows. Those occupy a large part of your IPO preparations. What were some of the top-of-the-mind questions that your investors had when you guys were meeting people, when you guys were active on your roadshows?
See, IPO investors are extremely sharp, okay? Only difference between a public market investor and a private investor is private investor possibly has a little more time for you. A public market investor is managing a fairly large portfolio where they've invested, and then they're looking at IPOs. So one of the things that people were asked us is, what do you do? Why should somebody care about, and the questions are framed in a very simplistic manner, but if you don't have a cogent answer, a very succinct answer, you've lost them. So what's your moat? What's the space, spend management? Why can't banks do this? Why can't corporates build this themselves? What's your need? How long would you stay relevant, right? Those are the kind of questions that we needed to answer very clearly. And a track record of 12 years today, 13 almost now, really helped, and the growth trajectory. Numbers are also very important. When you're talking to an IPO investor, you need to be able to show your numbers, and solid numbers. Contrived matrices are frowned upon. Basic stuff like revenue, EBITDA, gross margins, PAT, or PBT, these are things that they really appreciate.
And in your case, there was not so much of an Indian context that one could compare numbers with and say that relatively this is where you stand. How did you attack that question? Because at a fintech conference, there are going to be a lot of these people when they come up for IPO. Everyone is going to project themselves as a business separate from the other. This is a question which a lot of people will have to go through as well, especially when you're trying to play the uniqueness card. So how did you play the uniqueness card with? And your stock also did very well on listing. So how did you really quite do that?
So yeah, I think we just announced our Q3 results. This was our best quarter in growth in terms of revenue as well as profit. So the stock is doing quite well as well. But on a lighter note, I hope for the other fintechs who choose the path to become listed, if they're profitable, we would be a good benchmark, and somebody's going to turn around and say, hey, we are Zaggle of this space, So that's our hope. But for us, it was a big challenge. It was difficult to be able to explain what do we do, because there were no comparators, there was no multiples. But we also were able to use global comparators. And the uniqueness is also something that you can use to your advantage, because everybody wants to bet on the next big thing, right? As long as you're able to convince them that, yes, you're not a flash in the pan and you're actually the real deal, and not everybody would be convinced. But if you're able to do that with a reasonable number of early adopters and late adopters, that really helps make the case for yourself. I think uniqueness is good, because you don't want to be the 30th company in your industry with 29 listed. So
Sure.
all said and done, uniqueness is good.
Absolutely. We'll take last two questions here. How do you succumb to the temptation of valuations? Because what we've seen in the last maybe 18 months is that a lot of companies that have come IPO are much lower than the pre-IPO rates as well, much lower in terms of valuations on the pre-IPO rates as well. The idea is to leave a lot on the table. So what was the thought process at Zaggle when you were arriving at that listing price?
So look, our stock is about 70-75% up from listing 4-5 months ago. And to be honest, we're happy, but we're not surprised, because we left money on the table. It sounds counterintuitive to leave money on the table, but I genuinely would advise that to every company that is thinking of getting listed. Leave money on the table for your investors. That's something which will help you in the very long frame of mind, because if your reputation is built as a company which cares for their shareholders, which wants them to make money, and is acting in that way, not just talking. Whenever you have a tough cycle, in all companies, and just like life, you will go through ups and downs.
Sure.
These are the folks who will back you, right? Because you've made money for them. There's trust built. So leaving money on the table is very important. I think we were fortunate in some ways. Necessity is the mother of invention. We were largely bootstrapped, although we had a couple of institutional investors who continue to be with us. But that allowed us the freedom to be listed at a price that we knew was not a fair market value by any stretch for us. But we knew that, this is what is going to help our investors make a significant return in a short term. Great. So that's something that if you have institutional investors, please explain to them that you got to leave money on the table.
And lastly, how does it feel living quarter to quarter? Because obviously you knew your financials even before listing every quarter, but now you have a mandatory requirement to put it out on exchanges. You do analyst calls, you'll do more analyst calls as you grow up, get thrown to very bizarre questions as well. So how does life really look like living quarter to quarter?
See, again, I give a parallel. It's just like getting married, okay? Now you have to answer to your spouse, you have to answer to in-laws, their relatives, you have more functions to attend, you have more stakeholders to cater to. But it's a sign of growth. It's a sign of maturity. Being a listed company is basically saying that, look, we know what we are doing. And we are at that level where we can take that additional responsibility of public's money, right? So I think it's a sign of growth. It's a good thing. It is a different life. It is a different life, but it is good in many ways. Of course, there is more expectation, more responsibility, and there is higher visibility as well. So the visibility is good, but there's higher scrutiny as well.
There is.
So you need to be very careful of what you speak, on which forum, your blackout periods. So all those things are an extremely important thing for you to keep in mind. But I guess, as I said, it's being listed as a company in a company's journey is more or less, I think, sooner or later, everybody should think of it at least.
Perfect. And that also becomes the ultimate exit path for most of the investors. Sure. Do we want to take one question or should we wrap? Wrap? Okay, cool.
Thank you, both of you. Thank you so much.